Hey guys, Mike here. So about what a recovery in the market somewhat today, as you saw, as we lead into what? PPI tomorrow, CPI the next day. And understand from what I've read, remember they've upped these estimates. They're not decreasing it. They're not expecting this to decrease. They're actually expecting it to be a slight increase. And so I'll be surprised if we don't at least hit them. And of course, if we hit the numbers that are coming under from the bar they set, what do you think the market's going to do? Put in the comments what you think. Now in this video, I got a lot of stuff to cover, especially at the beginning. I'm gonna call out an epic call. I mean, this one, you just gotta give the man credit and say, hey, you know, it's right there. He nailed it. And so, because something very big happened today. Did you happen to catch it by any chance? We're gonna cover it and a bunch of other stuff. Now, when you look right here, because one thing that's happening, if you ain't noticed, a lot of major moving averages are either being broken or they're being bounced off of today. Okay, and so again, we've been going red, red, red. It seems like we're due for a bounce. You kind of saw it right now. I know they're running up the futures right now. We'll see, because a lot of this depends on the data tomorrow. But when you look at this call made by Jim Carson, which I show you guys every once in a while, and you see this tweet here. It says, when does the SPX fill the gap it created with the election results, right? The election gap. And then Jim Carson goes on to say, and this is epic, on November 29th, 2024, it will fill on January 13th. Well, what is the day? January 13th. You got to applaud the man, whatever you want to do, but that is an epic call to be able to hit that one. Amazing. Okay. And of course, I showed him a bunch of interviews throughout this year. He's pretty much been nailing it, and I'll try to get you his latest here when it comes out. Now, this right here, up 20% 2 years in a row isn't a reason to be bearish. What's amazing, though, is in the 21st century, this is the first time it's happened. 2023, 2024. When was the other ones? Leading up to the dot-com bubble, right? 96 through 97, all the way through 99. Matter of fact, actually, I'm sorry, 95 all the way through 99, which is kind of crazy. And so usually, you know me, I don't care what happened before pre-2000, but it's amazing to think that epic bull run from 2010 all the way to 2020, and we didn't have 2 years back-to-back 20%. And you just have them in 2023, 2024. Why is that? I understand they're saying we can still have a good year this year, right? That's what they say. You can see some of them red, some are green, whatever. But why? Okay, I've been saying this for a while, and it's the truth. The reason why this stock market continues to go is because the housing market sucks. It sucks. Okay, look at this. This right here is net percentage of banks reporting stronger demand for government mortgages and GSE mortgages, and then there's the 30-year fixed rate. It's over 7%, folks. Nobody wants that. We literally have been negative territory at the highest 3. This is the highest we've had in like 3 years of volume. The volume is like as bad as it was in like 2011 or some mess, whatever that was. And so normally you're up here 20, 30, 40, 50, 60. We're sitting there at 3.4 and negative 10. Okay, that is not good. So what, and why? I mean, why are people doing this? One, it takes a lot to get qualified. You got to make a lot more money now to qualify for these houses. Two, imagine after these fires in California, it's going to go up even more. But the share of taxes and insurance up to 33% now. And I can tell you in Florida, that is definitely the truth. Here, insurance sucks, okay? And I'd imagine California's got to be even worse. And so money's not going in the housing market. It's got to go somewhere. It's going into the stock market. That's what's been happening in the last 3 years. That's why we had the first time, because what's different now? For the first time ever, the housing market isn't what it used to be. From 2000 to 2021, how everybody was buying rentals and Airbnbs and their primary care, their primary residence and all that fun stuff, and that is not happening right now. And so those big down payments, $30,000, $40,000, $50,000, those are going in the stock market right now, folks. That's where they've been going the last few years. Okay, so when you ask yourself, how can this keep going up? Because they aren't buying, nobody's buying houses. That's why. Now, revolving credit, just going to show this to you. Take it for what it's worth. Major drop, biggest we've seen in about 3 years here. Don't know what caused it. Not sure. A lot of it was revolving credit cards. And the only thing people would say is maybe we're tightening our purse strings, which people should be doing, by the way. But, if that's happening, that's not good for the economy, right? And so we'll see what the next report says. Let's see what 2 reports in a row say. And you can see over there in January, February, March 2020 is the last time we saw drops like this. And so let's just see what happens 2 reports in a row. Just keep that on your radar. Now, SPY. On the SPY, this is important to note. It did not fill the election gap completely. When you are looking at gaps and you're looking at more accurate bounces off moving averages and stuff, I kind of really discovered this the other day, really. when I was doing research for the members. I want you to look at this right here. Here's SPX, right? What did SPX do? Filled it to the penny. When you're looking for more accuracy on your gap fills, your moving averages, this right here is the one you want to go with. We talk about the SPY because that's what everybody trades, okay? Not the SPX. And so I just want to show you that. So if you're looking going, wow, the SPY didn't fill it, watch and see if the SPX did. Wow, the SPY didn't bounce off this moving average. Watch and see if the SPX did. Okay, just a note there, okay? Now, going back to SPY, clearly you can see, what do we got to do now? You got the bounce, you're running futures up, let's say PPI comes in line or whatever, and the market wants to start to move back up after this sell-off. It has to get through what was support, okay? You have to get through that as resistance, and then what you really would love to see, may not get it, may, if we just rock it up, it may just rock it through this, but what you'd love to see to really confirm this is to move up, retest that level, okay, and then take off from there and start going into that volume gap right there. That's what you'd like to see, just to kind of make it more of a confirmation. Now, what did you see that was really green today? You might even notice it. RSP, the equal weight ETF and the S&P outdid them all. I mean, every one of them, even the Dow, I believe. It was up about 0.88%, I think, by the end of the day. Again, this is one day right here. And so, because it's been a horror show for RSP. And so again, this one will have some damage to make up for, but it was interesting to see all of these stocks. This means that these are equal weighted, right? So more stocks were participating finally in trying to get above this. This thing is broke many moving averages. The chart is just damaged beyond belief. And so there is and we talked about breadth. Breadth has been sucking, but normally when you get breadth sucking this bad, you usually get either a short-term bounce or some form of a bounce. Again, we put up all the moving averages. It didn't quite hit the 200. We talked about that. We thought maybe it would hit the 200. I thought it got down there already, but it did not. It's missed it by a few bucks right there. And so, again, I don't mean it can't come back down. All right, we'll have to see, get through all this data this week. And don't forget, we got bank earnings. Okay, we got bank earnings on top of this. And we're going to talk about a stock to watch when it comes to those bank earnings. And so, you look at this one, but if this starts to pick back up, you don't think the Mag 7 is going to pick back up, and then the SPY goes. Because the real big call everybody's trying to do here is trying to say, look, this thing's going to rally to a new all-time high. That's going to be the blow off top at some point in time this year, and then we're going for the big, crash down, whatever. And maybe that's going to be the case. We'll see. But that's pretty much what you can see across the board. Everybody's trying to call for. Now, IWM, there's another major moving average. What did it bounce off of today? The 200 moving average and this fair value gap right here. There's a little boxes that we highlighted in Sunday's video for those who actually watched. And so, no surprise you got a bounce. It needed to hold that. Last time it got a bounce off of 200, it did really well. And so we'll see if this is going to hold right here or not as it mitigates these. There's a couple of fair value gaps and actually a gap between the two as well that could still be filled. Again, this will depend on what? The 10-year yield tomorrow. As you can see, it ran up overnight. They keep running this up overnight, right? And again, new high as far as going into this year and the last few months. Another high for it, so it just keeps on setting it. But again, it's got room to run if it wants to run. If that data tomorrow comes in better or as expected, this is going to drop. It's going to drop, and IWM is going to run, and risk assets are going to run. That's what should happen. If for whatever reason the inflation comes in higher than expected, then obviously this will continue to run up. Okay, and you can see what's been happening. And this is, I talked about some of these stocks. Some people are asking about quantum stocks, and I said it's not in my risk profile, but good for you if it is. And you can see these are getting they're annihilated. I mean, all of these, not even just quantum, but everything on this list has been going down major since the IWM has been going. See you later. Okay, and so we'll see what happens. These are high flyers. They can turn around and just start going. But it's like I said in Saturday's video, when you get this huge down pressure on stocks that are going up, 200, 300, 400, 700%, all this crazy mess, a lot of times that will continue. It will just continue to the downside as money rotates into other areas. All right, I put this in the morning news brief like every time. Like surprisingly Friday, what was the hottest sector? It was travel. It was cruise stocks, it was airline stocks because of Delta earnings, right? XLE continues to go pretty nicely right now. Healthcare, another one beaten down. So, you're seeing areas that like XLE and XLV that weren't loved in 2024, all of a sudden they're getting love, right? Because now they're down. That's how the market works. And so again, if yields drop, watch these high flyers, risk back on type of stuff. That's what you need. So also because of bank earnings, watch KRE. filled this big gap right here. As you can see, kind of fell below, came into what was resistance, turned into support area right there. So this is a key area. There's a lot of regional banks reporting this week. And so if they come out with good stuff and saying we're doing great and they're crushing their earnings, then as you can see, KRE start to move back up as well. And so this is a big one for it. So watch that for a pop right there. I think DPST, maybe the 3X if you like that kind of stuff. But I think just looking at this one's enough. And you can see what's weird about this one. Rarely do you see the 200 weekly moving average and the 200 moving average sitting there. So if for whatever reason we continue to get a drop and it breaks right here and regional banks come in with weak earnings and guidance, and the guidance is the key, watch that area for sure around like 54, 55 bucks, because it's rare you can get a 200 weekly moving average and your 200 daily moving average right there on top of each other, and it's already broken all the rest of these. So again, that would be an interesting spot to break through, but 54, 55, somewhere in that area if it does. But if regional banks are killing it and crushing it, obviously it's going to be a whole different ball game. You can see even when you pull down like where this whole rally started from, that also puts you right at the golden pocket. So that would be a fantastic place to try to pick that up or to see a bounce. But, I just want to put it on your radar and, let you know about it and just pay attention to the bank earnings. And remember, I'll put all the bank earnings in the morning news brief for you guys so you'll know. Now, another stock that bounced off a major moving average is AMD, also showing bullish divergence with its RSI right here. But when you look, what moving average was it? It's a big one, the 200 weekly moving average. This is a big one. It's fell through it before. It dropped 20% when it did. What's crazy, it didn't even touch its 200 weekly moving average from 2016 all the way to 2022. I mean, 6 years. Even the 2020 crash, 2018 crash, didn't touch it. All right, and now here we are once again. And so if it falls through, we know what we talked about. 107 is what you're going to be looking for. But that's what held AMD up today. And you can see right here, a lot of volume in this area. This is not what you do not want to be losing this area right here. So that is really the key right here. Now, NVIDIA, of course, just a beautiful stair step down right here, one day after the other, it looks like. And it is the same trend over the last, I believe, like 5 days. Drop, pop, early AM, then do nothing. Pop, drop, then do nothing. Drop, pop, I may have reversed that. Drop, then pop, and then do nothing, right? It's like every single day. But what was funny about this one is I told you guys 133 was people were going to be setting to dump their shares or anything, calls, whatever they had in it. And it, at the last minute, last like 15, 20 minutes of the day, what it do? Ends up getting above 133 and closing above 133. Now, I don't know about you, but as soon as I saw Tesla start ramping like crazy at the end of the day, I was like, uh-oh, NVIDIA, and even Tesla went green a couple times during the day. I pretty much knew at that point in time, like NVIDIA is definitely going to end red for sure, right? Because these two, the options market just cannot or will not support both of them. And so key right here, again, try to hold 133. If it breaks that, 130 is on deck for sure. A lot of people are going to start cutting positions and everything. Needs to hold that right there. Really 129.74 is where I'd say once you start dropping, it's going to get to. But again, just watch 133, like 34, I think is the exact number I'd be looking at. And the morning is going to tell you a whole lot about NVIDIA, I believe. Now, speaking of Tesla, you can see right here, big old green candle. Got just above this trend line right here. And we had talked about there's going to be 2 different moves. And you might have noticed at the end of the day, look at that. 27 minutes, boom. Almost 3% move right there in the last 27 minutes. And how does Tesla move? The options market. The options market started coming in, bought up about 20 million worth of bullish calls right there in the last 20 minutes, and see you later. $8 move on Tesla right there. And so that's how, and you can see right there, I'll zoom in for you. That was your call volume coming in. And you can see how Tesla, look at the chart, and then look at the call volume. They move almost identical, right? That's how it moves, okay? Not fundamental, not anything else. Just with the options. So options love Tesla a lot more than they do NVIDIA. And so we talked about this move. And I'm telling you right now, it's going to be $410.30 will decide the next Tesla move. So if we continue to move tomorrow, you get through 410, then you're going to 414. Obviously, if we reject the 410, maybe a lot of people are going, please come back down to, I believe it's the 50 moving average and try to bounce from there. So we'll see. Another one, IGV. Software has been absolutely horrific lately. This has been dropping off a cliff, it seems like. Another moving average. It got to bounce off the 100 moving average. And this is key. When you're coming down below these moving averages, what you're really looking for is not to break them. It's to retest them. Remember I told you that? It retested that 50. It got rejected. And a lot of these stocks and indexes are doing this where it'll break them, but you're looking for the retest and get the rejection. And that's what it got. And it's been coming down ever since. But you can see, again, you can look up the top, like Adobe and things like that. That's the software stocks in this ETF. But, 9013, if it breaks the 100 moving average, is on deck, because guess what's right there? The old all-time high and the 200 moving average and volume, okay? Berkshire Hathaway, what's it doing? Coming down to 200, and 200 is key for this one. It always seems to bounce off that 200 unless we're in some kind of stock market crash. It's money for it. Its moving averages always stay really tight because of the way it moves. And so another one coming down to 200, if you happen to like stuff like Berkshire or one of these others, you can do that. But again, Berkshire also coming down. And then you look at the data tomorrow. No earnings to worry about. We'll start banks later on Wednesday. But here you are Tuesday. Small business index will come out. That ain't nothing. Then core PPI, and then PPI month over month at 830. That's what you're looking at, guys. So buckle up for that. CPI be the next day. So I hope you got something out of it. Please hit the like, subscribe button if you did. Let me know how you're dealing with this market stuff. Are you buying dips or just holding off and waiting? So anyway, think about signing for the membership and less than McDonald's combo. It's everything you get out of it. And I'll see you guys tomorrow.